Well, hello. I am Kerry Wood, the CEO of the Sacramento Region Community Foundation, and I am joined here by Mike Miller, who is the Chief Investment Officer for Crewcial Partners. Welcome, Mike.
Thank you, Kerry.
We're going to launch into some questions so that you all can understand the markets and how things are going here with your funds and the assets at the foundation. So, Mike, I'm going to launch in with the first question. So we're now a little over halfway through 2024. Can you give our fund holders an overview of the state of the market since January and how the market impacted the foundation's portfolio returns?
Yeah, so the markets of this year, Kerry, been through two interesting segments. The first 6 months of the year were very calm and upwardly trending. There was a little bit of a hint of a problem because basically most stocks really struggled, and a few, i.e., well-known Magnificent Seven companies did very, very well. And it was a very pleasant time. And the foundation's portfolio has generally kept up with that. We don't own as much of them in the foundation portfolios as the indexes, but we had other things that really worked that kept us even. Then things changed in July and as of into early August as well when we're recording this, which is the market suddenly started to become, I think, more concerned about a lot of different things, the complexity of inflation, interest rates, economic conditions. And that led to what's been called so far, and I'm not sure this is the right term, but the great rotation away from some of these big companies. And so there's been a tremendous amount of volatility of late. We've seen it around the world. And it's essentially kind of become a bit of a correction, maybe for the excesses that existed in the first 6 months. This is the type of climate, though, where the foundation strategy of being more diversified really pays dividends. And we've been seeing some significant dividends, i.e., during a time where markets are falling, the foundation's investments in aggregate are actually rising a little bit. And so it's been a really nice chance to see how a more diversified, well-constructed portfolio can do.
Fantastic. Thank you. So the foundation offers four investment pools. What are the earnings for our portfolios at the end of June of 2024?
Yeah, so as of June, the end of June, the four pools, the endowment pool is up 5.5% for the first 6 months of the year. The long-term portfolio is up 6.2%. The intermediate portfolio is up 3.8%, and the short-term portfolio is up 2%. So they're all positive. And actually, the more risky the portfolio, the higher the return, and that's what the first 6 months of the year have been like.
Good to hear some positive trend,
Yes.
at least on the upward side at this moment. So, can you tell us how our quarter two compared to other endowments that are held by nonprofit organizations and our fellow community foundations across the country? We have some benchmarking data I think you could share.
It's around the middle of the pack at this point, which normally would not be at all satisfying for us or satisfactory. But we feel as though with the portfolio being positioned as distinctly and in a more diversified way in these indices, when other portfolios are largely index hugging, we're feeling pretty good about being around the middle at this point. And again, if the third quarter, which is still early, were to proceed as it is right now, we will not be in the middle. We'll be way near the top the way this year is starting to unfold. But we're not there yet, so that's down the road.
So kind of middle of the road is where you would say we are. Yeah. Okay.
The facts we have right now, middle of the road. I'm looking forward to maybe giving you a better answer 3 or 6 months from now.
I'm going to look forward to that. We just have a couple more questions. The next one is that, of course, 2024 is proven to be a bit of a wild ride with our political change, the CrowdStrike outage in July, and a large number of local wildfires. How does the foundation position itself to handle volatility when it comes to the market?
Yeah, it's a great question. So the first thing is something I alluded to earlier. You have to be diversified. You have to not have too many eggs in one basket. That's one of the challenges of this great Magnificent Seven era is that they're such big companies that they force investors to own more and more and more of them. And we've really avoided that here. And that is ultimately becoming to be a very important factor in protecting capital and the foundation's capital over time. The second thing you have to do in addition to being diversified, you have to understand the limitations of what you do and don't know. So a lot of things are happening, as you said, and there were probably both of us could add to that list. It's a really long list. It's really confusing. And there's unfortunately, it's not this happens, so that's going to happen in the markets. It's just too complicated. So that's why we work really hard to make sure that we don't try to guess what the future will hold, including the actual events themselves or what the market will do, because unfortunately, there's just no way to know these things. So you stick to your long-term strategy, you account for the events that are occurring around you, and you make sure you stay diversified. And I think those things serve us well and will continue to serve us well.
Okay, great. Can you explain to our fund holders how your advisors at Crewcial work with the foundation's investment committee? There's a lot of back and forth, a lot of sharing, a lot of advising. If you could simplify that process, that would be great.
Yeah, it's a great question. So this is one of the things I love about the structure here at the Community Foundation, which is that the Community Foundation has built this highly expert filled group of investment professionals and others who understand investing, understand the foundation's goals. That's the investment committee. And their job is to make the decision. So they decide with recommendations to the board around the strategic asset allocation, stocks, bonds, et cetera, for every pool. They then hire and fire managers and use index funds and do the positioning for every pool. And our job as a Crewcial is to come in and give them our, unbiased advice as to how to best do their job, because they are volunteers, and this is our job. We spend all of our waking moments, it feels like, thinking about this. So we come in with recommendations, and the committee then decides. And there's usually a book is published for every meeting, and sometimes special meetings that can be anywhere from 50 to 100 pages long. The committee members never seem to miss a page, which is great. They always ask a lot of great questions. They don't always approve everything we want to do, but for the most part, we're well aligned with what we're all aligned in terms of what we're trying to achieve. And so that's really what it is. And having an investment committee of this caliber and this amount of patience, because I have to tell you, I think in this era, when we look back at what made the difference between great outcomes and not so great outcomes, is who had the patience to stick to their strategy, even when things did get tough. And I think that's what your earlier question also opens up that window. And it's not a worry here at all. It's really remarkable how great this committee is.
Yeah, I would agree. And I also appreciate, that we, and you, through your guidance, we have to look at the long haul, look at the long term, and really be calm and patient, and we will persevere. So I know that's been the strategy, and it's worked so far. So keep on in that direction. So Mike, I want to thank you for being here and for your continual wise and sage guidance throughout sometimes tumultuous moments like this in the market. But we are holding fast, and we ask our fund holders to look at your fund holder statements that reflect June 30. And there's an investment overview there that can give you a simplified look at the returns. If you have any questions, we have access, of course, to Mike at any time. Please contact our philanthropy team. If you have any questions we can relay to Mike and get answers on, we really encourage that and look forward to it. So thank you, and we'll sign off.
Thanks, Kerry.